Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi.
Hi,
good morning.
Welcome back.
Thank you. Thanks, Nigel. I mean, so while I was away, we hit 18,000.
Yes.
And I believe, Sonia, you were not there yesterday as well. So Nigel was the representative on the show.
Did you do the Bhangra yesterday?
No. Sonia, that I left for you.
So,
We'll wait for Sanjeev Bhasin for that, right?
well, 18,000 it is. We're there. And which means, by the way, that we're only, 3% away from all-time highs. 18,604, which was the high made in October of 2021. Just very briefly, 18,000 yesterday, comfortably, very strong breakout, very strong momentum. We'll talk more about that in terms of what this means from here. Overnight, you have some subdued cues. So U.S. equities are lower, NASDAQ is down 1%, yields are slightly higher. But I would say, don't read too much into this. This is month-end repositioning, which was the main driver, not very much else. There wasn't very much else going on in any case. The big drivers lie in front of us, which is, of course, the Federal Reserve meeting that is tomorrow night and more stuff, jobs data later on Friday. So last night's data, I would say, you should sort of treat it with a bit of pinch of salt and look at the SGX. I think that's what's happening. We're up 115 odd points at this point in time, an hour before markets start to trade. 18,176, indicating the momentum maybe continues for a bit longer. Guys, hi.
Absolutely. It's just a matter of when, right? And not if the market hits new highs. 52-week highs as well, just 2% away. So if we are not doing Bhangra, I'm sure the traders are, investors are definitely rejoicing. Because not only has the Nifty conquered 18,000 yesterday, but it's been 3 straight days of gains, and now it's a 7-month high that the market is sitting on. The cues look very positive and favorable for the market. There was large buying from FIIs yesterday. Over 4,100 crores was the money that was pumped in by FIIs, while DIs pulled out about less than 1,200 crores. Strong earnings from a lot of large caps. This earnings season has been pretty good. By and large, 90% of large caps have done well. Yesterday, L&T reported a very strong order inflow. A 23% year-on-year growth at the group level is what L&T saw in terms of an order inflow. Bharti's numbers were a big beat, and that stock in any case has been at a record high. The US markets overnight were not that good, but give and take everything in the month of October, it's been a 14% gain that the Dow has seen. So even the US markets have come back after a weak preceding month. All eyes, of course, will be on the Fed Reserve's, FOMC meeting, and a 75 basis points rate hike has been priced in already by the markets. But there are a lot of other data points that we are expecting, whether it's the job opening, the construction spending, ISM manufacturing. So it's a data-heavy week. But give and take everything, I think this market, is firmly in the grip of the bulls. At least that's the trend that we've seen over the last many days.
Sonia, absolutely. And I think, I was looking at the change. It seems because you're above the psychologically important 18,000 market, it looks like the market's done a lot. But, I was last on air on the evening of Diwali. From that point on, the Nifty is up just 1.5%. Yeah. That's it. The mental makeup changes. You're above 18,000. You're back above pivotal level, and you're very close to all-time highs. So I think that is essentially important, not the numbers themselves, which are not. The market has consolidated a long time, 17,500, 17,800, and finally we've got this push higher. Let's see if it can sustain. Let me just quickly outline. So the NASDAQ was down 1% last night. You've got the 10-year, which actually moved up a little bit. But a lot of this I would attribute to the month-end positioning, repositioning, whatever you want to call it. So don't read too much into it. There is the Fed decision tomorrow night. And then there is the U.S. jobs data on Friday. A 75 basis point Fed hike is priced in by the markets. That is for November. That is tomorrow night. We will react to this on Thursday morning. So that won't be a surprise. What the markets are expecting is that accompanying the 75 basis point hike, the Fed will indicate a downshift in terms of the pace of increases. We've heard various Fed officials say that it's not necessary that every meeting we see a 75 basis point hike. In December, which is the next meeting after tomorrow, you may get a 50 basis point hike. So, the debate is whether the Fed will actually indicate that in its commentary tomorrow. And I think that's fairly, if it happens in a meaningful way, it's significant. It's significant for the markets as well. We've seen what happened in Europe, the ECB. There was the initial read was that the ECB is slightly dovish. We saw a big fall in yields. We've seen other central banks, etc., indicate and markets reacting very strongly. The only thing is that the markets in the US are maybe already pricing some of this downshift in. The S&P 500, by the way, is up 11%. The Nasdaq is up almost 10% in the last 12 sessions. This is from the 13th of October. 13th of October, by the way, is when you had that big shocker of an inflation number, CPI number in the US. From the low of the 13th of October, the S&P and the Nasdaq are up 10 and 11% respectively. So the downshift will matter. The commentary will matter, but some of it may be in the price. I mean, if you're looking for a big, roaring risk-on rally, immediately, you'd probably have to wait a little bit because the market's done quite a bit. The Nifty here closed above the 18,000 level. As I said, it's pivotal. It kind of sort of, in a way, changes the mental makeup that you're very close to all-time highs. By the way, it should be no surprise, right? I mean, all this year we've been talking about how the Nifty has been the strongest market in the world, strongest large market in the world, has consistently been at the #1 position in terms of returns year to date. And so it should be natural that we are, closest to our all-time highs, the first as well. 1/3 of the gains yesterday, I was just looking at the Nifty constituents, came from the HDFC Twins, Bank, HDFC Limited and Reliance Industries. A small cap index was flat to slightly lower, actually. Mid caps were higher, but large caps essentially is where most of the gains came from. Supports for the Nifty come in at around 17,850 levels. And on the way up, there is this upward sloping channel on the Nifty, which basically gets you targets at about 18,100 to about 18,300. So I think the first stop at about 18,100 and then beyond that 18,300. But I think, 3% away, all-time highs. That is the real kind of marker that you want to watch out for as we start another session on a pretty strong footing according to the SGX Nifty. Now, what are you watching?
Well, for me, the Fed meet stands between the Nifty and the fresh all-time highs. And yesterday was a cracker of the session. Nifty went ahead. They conquered that 18,000 odd mark. And on a day-to-day basis, the last 4 sessions odd, we had a gap up. That gap up gets sold into. Yesterday, we broke that jinx. The Nifty ended at the high point of the day. And domestic-facing themes, they did well. Whether you're looking at cement, Ultratech Cement, Dalmia Bharat, you had, autos as well did do well. That Mahindra & Mahindra was up. At the end of the day, you had a pleasant surprise coming from the FIs, and it appeared that this was genuine buying. Big buying number coming in there, and the HDFC Twins as well came back in style. Remember, yesterday, both the pillars did well. The Nifty Bank, that was up 0.8%, while the IT index was up 1.5% odd. But the Nifty is only 3% away now from fresh all-time highs. And the HDFC Twins, they have actually been lagging. If they want to get closer to those 52-week highs, then the Nifty is definitely going to be getting there, sooner than expected. So the HDFC Twins, they hold the key. What are the FIs doing in the F&O market? Well, yesterday, we made this point in the morning. They're adding shorts. It's not such a bad thing. Yesterday, they were forced to cover those shorts. So they covered 10,000 contracts on the short side, and they added some longs as well. And they backed that up with writing some puts, which for me is a big positive. When they write puts, I like that very much. And they're buying some puts as well in case things go wrong. What were they writing? Yesterday it appeared 17,800 put, 17,900 as well as the 18,000 put. Between the three, there were close to around 75 to 80 lakh shares added. So now, in fact, the support for the Nifty, that we were talking about 17,500 because of 50 DMAs out there. Going by the options data, it seems to have moved up to around 17,750 odd. Just a quick word on the currency space. Towards the end of trade, I don't know whether we have an intraday chart of the rupee, but it did see some weakness, though it didn't disrupt the equity markets yesterday. Today, the dollar index is back at around 111.5 odd. So just keep an eye out on the rupee. It seems traders are okay with the rupee being sub 83 odd. So that could be another spot to bother. And only the Fed could stand now, the Fed meet and the commodity that comes out there between the Nifty and fresh all-time highs. Otherwise, November, in all likelihood, we could get that. And the SGX Nifty is saying we do another 100 points at gap up. So buy the dips. My guesses will continue.
Oh, absolutely. Deep shade of green this morning, right? And as you were talking about auto stocks, today is an important day because all the auto sales numbers come out. And once again, it's going to be a K-shaped recovery for the auto sector. So on one hand, the premium side of the market with its premium cars, bikes, SUVs have done very well. So your Marutis, M&Ms, Eicher Motors of the world continue to do very well. But on the flip side, the rural market, the entry-level segment is under pressure. So, names like Hero MotoCorp could continue to disappoint. So those are a couple of stocks that I'm watching. Maruti, M&M, Leyland could report good numbers, while on the weaker side, it's Hero MotoCorp that could be under pressure. A lot of earnings to watch. Today, you have the likes of Sun Pharma, there's Tech Mahindra, there's Nykaa, Lodha. So a lot of these non-index large caps as well that could report their will report their numbers. On Friday, there's Titan. On Saturday, there's SBI. So I'll keep an eye out on all of these stocks. And of course, L&T will be reacting to not just a good set of numbers, but confidence from the management on maintaining their FY23 guidance. So we'll talk about all of that and more in the next 1 hour. We have lots of cues coming through. First up, we have a comment from Pankaj Acharya of Antique, who says that the key monitorable now is the size of the rate hike in the US and the Fed's overall commentary in the upcoming monetary policy meet. He believes that the market may remain sideways in the near term with heightened volatility. He says their March 2023 Nifty target stands at 18,000 because of an increased recession risk in advanced economies. He also says that the US and Eurozone recession probability over the next 1 year has increased in the last 1 month from 50 to 60%. And overall, he says they continue to prefer large caps and domestic cyclicals.
Well, let's get you some money market views as well. Bhaskar Panda of HDFC Bank says that the dollar index gained ahead of the FOMC decision on rate hikes and oil cooled off a bit. In Asia, he says Bank of Japan data showed that they have spent about $45 billion to defend the yen. In India, his view is the dollar-rupee pair responded to these global factors as the INR depreciated mildly against the dollar yesterday, and the after effects are expected to last today as well. He expects the dollar-rupee pair to trade in a range of between 82.65 to 82.8 for the day.
Okay, let's also get a quick comment on the bonds then. Bhaskar Panda says the Indian bond traders are still trying to figure out the early MPC meeting this week against an uncertain global backdrop. He says lower oil prices could help, and he expects the 10-year benchmark bond yield to trade in a broad range of 7.4 to 7.5%.
Well, we have a lot of stock-specific action today as well to track, and we'll get to that in just a bit in our top 10 segment. We're looking at Bharti Airtel, L&T, Axis Bank, TCI Express, Equitas, Small Finance Bank, LT Foods and Timken India. Their stocks are on our radar on the back of positive news flow. While we also have Tata Steel, Castrol and MOIL, they are stocks that could react to negative news flow.
All right, Rajat Bhattacharya is Senior Investment Strategist at Standard Chartered. He joins us right now. Rajat, good morning. Good to have you with us here. Tomorrow night you have the US Fed decision. If they do indicate after a 75 basis point hike tomorrow, if they indicate a downshift in the pace of hikes, could that spark a rally, global rally? The S&P, mind you, as I was pointing out earlier, is already up some 11-12% in the last 12 sessions. But could this stretch meaningfully higher if that were to happen? Your sense?
Yes, Prashant, I think you've hit them on the head. Fed is probably going to hike 75 basis points, as you say, and then they're going to signal what is ahead. Now, one of the things that we need to watch out is that whether Powell is very clear and precise about that. I doubt he's going to be that precise. He's going to go by the data. We saw earlier the ECB president, Lagarde, use that same phrase, right? They are very data-driven and they're not very clear. They didn't give a clear guidance. I suspect that Powell is going to say the same thing. But yes, to your point that we're not going to see 75 basis points of rate hikes on and on and on, right? So what the market is expecting is another 50 basis points of hike in December. And then we will see. The terminal rate, we discussed it last time, is around 5%. Now, whether the market, whether the Fed even talks to that, whether it confirms that or plays down that is what we need to see. My suspicion is that he's going to first talk about where the job markets are, and we know that labor market is red hot, right? That is the one key thing that is holding back the Fed. We have to see the jobs job openings. We have to see the job market report, and all of that will come after the Fed, right? So the job market report especially will come after the Fed. So that is something to watch. But to your point, yes, I mean, we are expecting a slowdown, but what will the Powell be very precise about that? I doubt it.
Okay. Rajat, good morning and thanks for joining in. It's been a bumper Diwali and perhaps an early Christmas for investors and traders alike here in India, right? Do you see more legs to the October rally here in India? And if yes, would you pump in more money in emerging markets like India? Does your preference lie here or elsewhere?
Yes, Sonia, India is the star. We've discussed it on and on in this show, right? That I mentioned that across this, if you look at this global backdrop, India stands out. And why is that? There's a fundamental reason. India's earnings, India's economic growth are superior to what we see elsewhere in the world, especially in the emerging markets zone. So if you look at year-to-date performance, no surprise. In India is at the top end. You could take some of the LATAM markets, and that's primarily because they were propped up by the commodities. But India is an internal domestic story. I'll give you just one number. I mean, the FY23, the current fiscal earnings growth estimates for the Nifty is 15%. Where on earth are you going to get that kind of earnings growth? So yes, there is a fundamental story, and this is why we are very bullish on India. It's our top pick in Asia. But I must also add that valuations have become a concern, and I've raised that earlier as well. That doesn't mean that India has to, markets will pull back. But what I'm saying is the valuations are now more attractive elsewhere in Asia. You look at China, for instance, rock bottom. Chinese assets are going on sale. They've gotten worse in the last 1-2 months. And with 7, 8, 9 PE, you get good value in some of those assets. So our point is that basically stay bullish on India, and you can see the money flowing into India. You have domestic investors through their regular savings plans, and that's the right way to do, are adding to the exposure, but also be aware and be diversified,
right,
if you can.
Okay. Hi, Rajat. Morning. Good to hear India is your top pick. Valuation's a bit of a concern. But given the fact that, as you said, the Chinese market has underperformed, and valuation-wise, that's yummy. Do you see, would you look to allocate more money towards the Chinese market because of this? Because there are plenty of, question marks still out there with regard to the leadership, with regard to the COVID policies as well out there. So is that a possibility? And also in the near term, do you think India can underperform developed markets? If we have underperformed the US markets in the last 1 month, so I ask.
Yeah, I mean, to your first point, we are increasingly, the valuations are so attractive, assets are going on sale in China. Now, to your point, what we heard in the recent last few weeks is a reiteration of their policy of building the domestic economy, right? The China internal development story, where they want to make China a prosperous society by 2035. And all of that means is that they're going to put a lot of money into hard technology, into advanced computing, into 5G, into robotics, into green energy, and that is where the money is going to go in. That is where the money is going to be made. So if you're diversifying, we need to be a lot more picky about which sectors and areas we want to go to. The software sectors, for instance, are the old story. The new story is the hard tech. So we need to focus on those areas, the green energy sectors, as I said, semiconductors, artificial intelligence. Those are the areas you might want to pinpoint when you invest in China.
Right, Rajat, thank you very much. Great to have you with us here on the program. Appreciate it very much. By the way, to that point on what's happening, what you're talking about with regards to China, look at what's happening to the Hang Seng Index today. I think there is some 3% gains there, and I think the Chinese mainland indices, the Shanghai, the Shenzhen, those Hang Seng is up 3, and you've got the Shanghai Composite and the Shenzhen also up 1.5%. They're the best performing markets today, at least in Asia. China, that old saying, right? I mean, if you think that the price cannot go any lower, you'd be wrong. And I think the Chinese market has proved that absolutely right. I mean, look at the prices 1 year back, 6 months back, 3 months back.
Yeah.
Just keeps heading lower to that point.
And you can see what's happening with the economy as well, right?
Yeah.
I mean, with the kind of COVID restrictions and the impact it's had on manufacturing, the entire manufacturing hub, it might take some time to recover. But that was a view coming in from Rajat Bhattacharya, who said that, yes, India is their favorite market, but valuations continue to be a bit of a concern. But there are plenty of stocks to talk about, so don't go anywhere. We'll be back in just minutes from now with our entire... So the SGX Nifty is up over 100 points, 120 points in the green now, indications that the start will be well in the green. We're just about 2% away from our 52-week high, so just a matter of time before new highs are met. But lots of stocks to talk about, so let's get our entire research team on board. Bharti reported a good set of numbers. It was a beat on the earnings. Reema's here to give us a lowdown on that. Reema, morning.
Hi, good morning. So Bharti's consolidated revenues and margins have come in ahead of street expectation. Consolidated revenue is improving by 5.25% on a quarter-on-quarter basis. EBITDA margins expanding by 70 basis points to 51.3%, again surpassing street expectations. Profits went up 33% sequentially, but lower than expectations, perhaps on account of the 400 crore quarter-on-quarter increase in the finance cost. CLSA called it a solid set of earnings. UBS echoed the sentiment, calling the numbers a solid result across segments. The conference call is today at 2:30 p.m., where we will get greater clarity. A quick word on how Bharti's India mobile business compares with that of Reliance Jio, which reported numbers last week. Well, on revenues, EBITDA and ARPU, Bharti's performance was superior than that of Reliance Jio. So Bharti's ARPU, average revenue per user, went up by nearly 4% to 190 rupees. So now it's closer to the company's target range of 200 over the near term. But, for Reliance Jio, the ARPU increase was only 0.9%. The only place where Jio surpassed Bharti is the subscriber addition. Jio subscriber addition far outpaced that of Bharti, 7.7 million subscriber adds in the quarter for Jio versus only 500,000 for Bharti. But all in all, it's a good set of earnings coming in from Bharti Airtel. Back to you.
All right, Reema, thanks very much for that. I mean, other than Bharti is at 190 ARPU, that target at 200, which we've heard so often, maybe that should, the target itself should move higher. Maybe it will, but these are good set, as Reema pointed out. Tata Steel reported numbers as well. Nigel, disappointing performance?
The numbers were disappointing. First you look at the absolute consolidated number, that missed our estimates, and the consolidated margins as well missed our estimates. But as we know, for Tata Steel, we always look at the geographic breakup. That's India as well as Europe separately. And two big factors were the reason for a miss on the EBITDA front. One, that steel prices are under pressure. Two, they didn't get any benefit of lower coking coal cost. And the India business, well, it missed estimates, came in around 8,800. We were working with the number from 10 to around 11,000 rupees per ton. Europe, well, that was more or less in line. Europe had a double whammy, actually, because volumes as well were lower out there. So it came in at around $115 on a per ton basis, pretty much in line. You've compared it to, converted to rupees as well, was pretty much in line with what you're working with. The net debt number, well, that spiked up by close to around 17,000 crores because of the NINL acquisition, the dividend payout, as well as their capex. The management of the call, they told me that yes, the benefit of coking coal cost, lower coking coal cost, will flow through in the coming quarter by $90 per ton for India and $100 per ton for Europe. Though on Europe, there seems to be a question mark out there. They admitted that the second half of the year will be weaker than the first half of the year, expecting the stock to open up in the red.
Okay, so that's on Tata Steel. It's had a rather rough time over the last couple of years, but the stock that is, and perhaps more red today. L&T, though, it was a different picture altogether. Good numbers, robust order inflow, and the management confident of maintaining their guidance as well. Vivek has more for us. Vivek, morning.
Well, good morning. Absolutely right. They're guided for a 12 to 15% order inflow and revenue growth guidance. And they've hinted that, most likely they're going to be reaching the upper end of the band, as you indicated. When you're talking about the core numbers, most of the numbers were above the poll that we had estimated. Revenues coming in close to 42,700 crore mark, about a rise of almost 23%. EBITDA coming in at close to 4,900 crore. Again, a rise of over 22%. Margins coming in flat despite, the higher base. And when you're talking about the profitability, again, above the street estimates coming close to the 2,230 crore mark. Now, when you're talking about two important developments to keep an eye out for, L&T is looking to divest its entire road asset portfolio. In this particular quarter itself, the company is likely to sign an agreement to divest this entire road portfolio. The other thing, markets were anticipating the Hyderabad Metro divestment as well. However, the management has indicated they're looking to further reduce debt before that happens. Brokerages are bullish. CLSA says while the core ENC margins were a miss, and it's fallen both year-on-year and sequentially, they believe that margin visibility will increase due to softer commodity prices. Morgan Stanley has raised FY23 to FY25 EPS estimates by 1 to 8% based on the strong execution momentum that L&T is enjoying.
Okay, thanks a lot for that. So a lot of brokerages raising their earnings estimates on L&T. And the stock has had a good run lately. But let's find out the latest on Axis Bank. Nimesh is here to give us a lowdown on that. Nimesh, good morning.
Hi, morning, sir. I expect a large block in Axis Bank today morning. Bain Capital is looking to sell 1.24% stake in Axis Bank today. The book was launched last evening. The indicative price is 888, which suggests a 2% discount to yesterday's closing price. I'll go with the green because my sense is that deal will happen in the pre-open, in the block window. So, so there will be no risk of slippages. After this particular block, I'm not too sure on how much there is a lockup for Bain Capital, but they'll be remaining with 3% stake in Axis Bank. But today there's going to be a large block, almost 3,400 crores worth of block, where Bain Capital will sell 1.2% stake in Axis Bank today.
Nimesh, thank you very much for that. So that's one to watch. Now, Castrol, TCI Express, both reported numbers as well. Sonal is here with more. Sonal, hi, morning.
Good morning, Prashant. Let me start with Castrol, going with red here because, yes, the revenues grew, but the top-line growth was quite muted, up 4% on a YY basis. EBITDA was down 2%, and margins, they fell 140 basis points to come in at 23%. Profits were flat at 187 crore rupees. The company says that this particular quarter, that is the third quarter, witnessed inflationary and forex pressures. This was also led by volatile crude prices, which impacted base oil prices and the prices of additives as well. They say they have employed rigorous pricing and cost management initiatives which will help them contain the margins or improve them from here on. TCI Express, one of the few logistic companies which has seen margin being stable on a YY basis despite higher fuel prices. So going with green here, revenue growth of 13%, EBITDA growth of 14%, margin stable at 16.6%, leading to a profit growth of 11% coming in at 38 crore rupees. They also say that new value-added services, they are expected to contribute 25% to the top line by 2025. So good commentary coming in as well here.
Okay, Sonal, thanks a lot for that. Well, Abhishek is joining in to run us through a couple of other stocks he's tracking. Morning, Abhishek.
Morning, Nigel. So to begin with, Equita Small Finance Bank, they released their Q2 FY23 numbers, which were a beat in terms of the P&L. However, slippages remained elevated. Now, slippages are elevated despite the fact that they have used a different method this time. That is an intra-month recovery. If they had, as per an account slipping in that month itself, then they have not shown it as slippages. So net of that, slippages are elevated. The net interest margin softened a bit by 5 basis points on a sequential basis to 9% versus 9.05% in the previous quarter. So just to run our viewers, the slippages have come in at 314 crore, which compared to 296 crore in the previous quarter, and the annualized slippage ratio is about 5.5% when compared to 5.46% in the previous quarter. Asset quality has improved given the fact that write-offs remained elevated and they had a good recovery in this quarter. So restructured book in absolute value has declined by 17%, and as a percentage of loans, it has come in at 4.3% when compared to 5.5% in the previous quarter. As I mentioned earlier, both the NII and PAT is a beat to our poll. Coming on to the other stock that I'm tracking, which is MOIL, the prices of all ferro grades of ore with manganese content of more than 44% have declined by 7.5%. So prices of all other ferro grades of manganese ore actually continue as prevailing. So a basic price of EMD has increased for November by almost 5.9%. Back to you.
Okay, thanks a lot for that. Well, another stock in focus today would be Timken India, that ball bearings company. It's had a fabulous run in the last 1 year. I mean, it's gone from 1,800 all the way to almost 3,000. Surabhi is here to tell us whether the earnings justify the move in the stock. She's also tracking LT Foods this morning. Surabhi, over to you.
Few other results that are on my radar. The first one is Timken, good numbers there. Revenues have grown by 25% on a year-on-year basis. EBITDA is also up 6%. Margins are slightly lower at 19% versus 22% same time last year. And PAT is up 24% at 98 crores versus 79 crores same time last year. So a green for Timken. Next is LT Foods, where it saw a revenue growth of 31%, and this was largely led by the basmati rice segment. Gross margins have also improved on a year-on-year basis. EBITDA margins were slightly lower on a year-on-year basis, and this is because of higher freight costs. PAT is up 16% at 94 crores. Overall, good set of numbers by LT Foods, so we'll go with a green for that.
Okay, so more green than red this time around, an indication that earnings has definitely picked up across corporate India. But here's a quick recap of our top stocks in focus. Stocks with positive news flow, there's Bharti, L&T, Axis Bank, TCI Express, Equita Small Finance Bank, LT Foods and Timken India. while stocks with negative news flow, Tata Steel, Castrol India and MOIL. But let's get a quick comment on what's been happening in the world of commodities as well. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, the economic data is not so strong, and that has weighed on to commodities. If you look at the crude oil prices, we've extended losses now below $95 per barrel. For the month of October, clearly the crude oil prices did gain by 9%, but the start of November clearly has been on the weaker side here. Not just crude, when you look at the metal space, that has declined as well. You have the zinc prices now trading at the lowest in 20 months. In the energy pack itself, it is the coal prices now trading at a 6-month lows. In the ferrous metals area, steel is now trading at 2.5-year lows. Iron ore prices have continued to decline. That one is trading at a 22-month lows as well. The month of October as well for the ferrous metals was not so great. We did see prices for steel decline by 8%. Iron ore was down by 18% for the month of October. And that's clearly how November has started, especially ahead of the US Fed meeting.
All right, Manisha, thank you very much for that. So, softer commodities, softer oil, most welcome here in India. Us being a very large importer as is. We'll take a very quick break here. We'll come back. Deepan Mehta of Elixir Equities is...
SGX is suggesting that after yesterday's good close that we had, we could see another 100 points to kickstart trade. So that'll be pretty interesting and pretty good as well for the bulls. But let's get chatting about a couple of stocks. Deepan Mehta, Director at Elixir Equities, joins us. Hi, Deepan. Morning. Thanks so much for joining in. Well, Deepan, let's start off with L&T. Those numbers look good. Order inflow was good. Commentary as well fairly decent. And valuation, some support out there. What do you make of the numbers and your view on the stock?
Yeah, Nigel, good morning and thanks for having me on your show. I think an exceptional set of numbers. Not surprised you were expecting this kind of numbers coming through from L&T. And clearly, I think the stock is going to be an outperformer. It has been so. And what we like best is the focus on capital allocation. They are gradually getting out of capital-intensive projects like road and metro, and focusing on their core businesses of engineering, construction, and of course, they have great deal of value in their subsidiaries as well. So I think it's all gears, all going for L&T. And in a way, it's kind of a must-have stock in your portfolio because there's a strong infra capex cycle underway. And the best way to play that is through L&T, and it's a large cap nifty stock as well. So if you're benchmarking against any of the larger indices, then you cannot do so outperform without having L&T in your portfolio. Having said that, our disclosure, we and our clients are invested.
Okay, so you and your clients are invested. What about Bharti? Dipan, good morning. Very good numbers coming through, right? But the stock has also had a decent run. I mean, it's gone from 650 all the way to 820 in less than 3 months. You see more upsides here?
Good morning, Sonia. I think it will be a market performer. And I think that the company is lagging in terms of increasing its ARPUs. We were expecting more aggressive tariff hikes, and that has not come through. And debt also is gradually creeping up, and they've got investments to be made on the 5G side as well. So while the underlying fundamentals are good, they're not, as per our expectations in terms of, the kind of momentum which should be there in the top line and bottom line. Optically, the numbers are good, but unless they go in for tariff hikes or higher ARPUs through 5G or value-added services, at some point of time, maybe 2-3 quarters down the line, you may end up seeing a slowdown or stagnancy in earnings. So that's something to look out for in Bharti Airtel. But let's just wait and watch how it plays out. It's a kind of a well-discovered stock. And at best, you can expect it to at least perform in line with the sensex and nifty.
Deepan, hi, good morning. Prashant here. I have 3 stocks for you. I mean, pick and choose. One is Nykaa, which fell below 1,000 rupees. That was the best considered new age company to make it to the markets. There was great demand at the time of the IPO, but it halved. Yesterday, we saw a very large move higher, some 17%. The other one is Bandhan Bank, which is now back at, closer to 200 than to 300. And then there is Gland Pharma, which continues to sink. So Nykaa, Bandhan and Gland. Go on.
Yeah, we track all 3, Prashant, and my 2 bit on each of them. Nykaa is really a long-term story, and if you start to value it based on price to earning, price to book, then you're going to be disappointed. But you have to have faith that the management will eventually turn out super profits 3 to 5 years down the line. I know competition is creeping in, but they have some competitive advantage over there, having a first mover situation. So generally, we are remaining invested in Nykaa. The time to sell, I think, is gone. The second is Bandhan Bank. Not that completely convinced about the lending practices of Bandhan Bank. It's a great bank when it's a fair weather type of situation for the entire banking industry. But the minute there is crunch time, then banks like Bandhan Bank, suddenly you see ballooning of the NPAs. And that's the reason why we are seeing such low price to earning, price to book for Bandhan Bank. It was a fancied stock, but no longer because of the kind of NPAs which came up in the last 2-3 years or so. And Gland Pharma, I think there's an opportunity over there. Valuations have always been rich since its listing. But now, because of 1 or 2 quarters of disappointing numbers and a lot of anxiety about the parent company and how it will actually manage its debt situation, that is impacting the sentiment in the stock. And if you have a slightly contrarian streak in your investing strategy, you could consider Gland Pharma. It's a super pharmaceutical company focused on injectables where the competition is less, price volatility or price compression also is on the lower side. And it's got a great trajectory as far as new products are concerned as well. Expansion plans also underway. So I would look at Gland Pharma on a positive in positive light. Bandhan Bank is avoid, and Nykaa is really for the long term.
Okay, for the long term, Nykaa, right? That's one had taken a big beating lately. But Dipan, stay on. I don't know if you track these packaging companies, but I do want your thoughts here because AGI Greenpac, which was earlier known as HSIL, as we know, this is a packaging company. They're into packaging products, glass, PET bottles, etc. The results were quite good actually on a low base. So it was a strong set of numbers, revenue growth of 66%. EBITDA margins of 16.6% despite a sharp increase in input prices. Sandeep Sikka, who's the Group Chief Financial Officer at AGI Greenpac, joins us now to talk about that. Sandeep, good morning and thanks a lot for joining in. You know, earlier you had guided for 1,800 crores of revenues by the end of FY23. In the first half, your revenues are about 1,034 odd crores. Are you confident of meeting that guidance, and what could the second half look like?
So, if you see that we did in the first half itself 1,000 crore, so we are fairly confident because generally second half for us is much better than the first half. So we are fairly confident we'll cross the value of 1,900 crores, going forward on AGI Greenpac.
Okay, and what about your margins? What would it be? It was around 17% in the last quarter. What is the outlook on margins? And if you're saying second half of the year is better, then you should do more than 2,050 crores, right, for the year?
Yes,
So 2,050, can we work with that?
Yes, it should be in that range itself. Because if you see, Nigel, in the last 1 year, input prices have increased substantially.
Okay.
And the guidance is based on the current market prices of the input, like fuel has gone, increased year substantially, but it has come down slightly now.
Okay.
But other raw materials like soda ash is still, the prices are very strong.
Okay.
So average price realization in 1 year, we had to talk to our customers and increase the average price realization to maintain the margins. Like last year, we were running at an average price realization of about 27,000 rupees per ton, which currently is in a range of 35,000 rupees a ton. So
Mr. Sikka, Mr. Sikka, so we should work with around 2,000 crores. Is that fair, going by current prices? And you did 1,030 crores odd in the first half of the year. 2,000 crores is fair?
Yes, please.
And margin should be what for the year? You did around 17%. You were indicating that it's likely to go up. So what is the outlook on margins? And also you had an expansion that was coming on stream. Has it come on stream? Is it delayed?
It is slightly delayed in terms of the commercial production, but in terms of the margin, we expect that the margins should be maintained. We had also given guidance that with the new capex, which is a high value added, there should be incremental 1% margin, and we still maintain that. The product has started selling from that, but it is still under the trial run. The customer is validating the quality because this really goes to the high-end customers. So we feel that another 3 to 4 months, we should be able to start the commercial production for that 154-ton high-end furnace.
Okay. Can you tell us a little bit about the market share? I understand that you do have a 20% market share in the organized glass packaging industry. But are you seeing a shift from unorganized to organized? And what does the market share stand at currently? What is the year-end target?
So if you say just pure glass, then we are in that range. But actually what we are serving is an overall liquid packaging market. So we are there in glass, we are there in PET, and also security caps and closures. So overall market share should remain the same going forward.
Okay. And sure. So the market share you're saying is around 20% itself across the board, right? Across all segments?
Not all, it's primarily for glass. On the PET, we are a small player right now.
On the PET, you are, sorry?
Small player.
Small player. Okay, so for glass, it's 20%. Got that. And, 75% of your revenue comes from alcoholic beverages, 16% from FMCG, and 9% from pharma in terms of packaging. Will that be the way forward as well? Are you looking to sort of branch out into newer segments? And what will the revenue mix look like, say, a year from now?
Going forward, our focus is more on food and pharma sector right now, so that we are able to do a shift of around 10% from liquor and beer to food and pharma, because the average realization in that segment is much higher. So that's one of the strategy to further unlock, the margins, the potential margins which we can do. Okay. So the focus going forward is also food and pharma.
Okay, all right. Mr. Sikka, besides the results, there's a very important announcement that you've made on the exchanges with regard to Hindustan Glass. Now, this was in the works for a while, and you've said the corporate debtor, well, they have approved the resolution plan, and they've declared AGI as, the top bidder. So congratulations on that. But we need more details on this front, because reports were suggesting that the total money that you will be putting up for a bid was between 1,500 to around 1,800 crores. Can you give us a number or a range at least?
Nigel, we have a confidentiality agreement under the IBC.
Okay.
So I'm sorry, we are constrained by the confidentiality agreement not to divulge the numbers right now.
All right, Mr. Sikka. That's fine, Mr. Sikka, but it will be more than 1,500 crores. Because it will be more. How do you fund this then? If you could give us a split between equity and debt, will you be tapping the markets or will it be debt? Your debt is already around 800 crores, which has come down.
So primarily we'll start with the debt, and then we see a good potential in this asset going forward. And there can be a lot of upside on the equity side, and we'll raise equity over a period of time.
Okay.
But initial acquisition we will do with the debt.
So can we work with 2/3 of this funding will be via debt and 1/3 will be equity? Is that a fair assumption?
It will still more. We'll start almost 70-80% with the debt.
With the debt. Okay. The other question that I had is, you just told Sonia that you have 20% of the market share. I believe even this unit will have a fair bit of market share in the glass segment. Will it run into CCI trouble?
So primarily, Nigel, what we are doing is, as I said, we are not only into glass. What we are serving is the overall liquid packaging market. And market potential for liquid packaging is, the market size itself is 32,000 crore.
Okay.
And it's because if you see today, liquor, beer, even any of the products can be packaged either in glass, PET, or
So you believe, Mr. Sikka, that you'll get through the CCI muster, right? You'll pass it.
Yes.
Okay. Final question from me then. The potential of this business, what is the revenue potential? I believe it is around 500 crores per quarter. Could you clarify at optimal levels what can this business do? That Hindustan Glass that you'll be taking over, what revenues can it do, and rough margins that it can do? Very quickly, sir.
I can give guidance today on the revenue side. Today, they are doing about 2,000 crore of sales. And given the fact that we'll do, we are doing at 1,600 tons per day, we'll be clocking 2,000 crores. So the market potential is about 2,600 crores right now as we see. But margins as we see, we'll have to see how the things pan out.
But you had also said that you're focusing now on the food and pharma sector because average realizations are much higher there. And you'll be shifting 10% away from alcohol to food and pharma. So in that context, the margins could improve, right? Once you, and if yes, how much could the average realizations and margins go up?
So average realization for us on the food and pharma sector is generally 8 to 10% higher than what we do on the normal liquor and beer. So, but given the mix, so overall, we feel that 0.5% to 3/4% we should be able to unlock on the value on this.
All right. So thank you very much, Mr. Sikka. Appreciate you joining in and running us through all of that detail. So that is an interesting company, glass containers, glass packaging mainly, but other forms of packaging as well. We'll take a quick break here. The SGX, by the way, has come off a little bit. We were up, I think, 120 points at 8 when we started. Little come off. I mean, 97, 96 odd points, 18,157. We are, 13 minutes away from the pre-open session. And then, of course, market opening at 9:15. Mitesh Thakkar and Sudarshan Sukhani with us on the other side for some tech. All right, welcome back. The SGX indicating almost a full 100-point gap up, 0.5% higher. and marching ahead after conquering 18,000 yesterday. Well, what should you be doing in terms of trades? Mitesh Thakkar is joining us. So is Sudarshan Sukani. Gentlemen, good morning. Great to have both of you on the program. Sudarshan, how would you approach things? The SGX is indicating a triple-digit higher start. Would you want to go in immediately or wait for dips to try and get back in?
Good morning. See, for the last many days, I've been saying we should be staying on the long side of the market in the Nifty and in the Bank Nifty both. This is not a day trader's market. The large gaps that we see benefit positional traders and swing traders. So the view has been you take a position in the Nifty or the Bank Nifty, it's really interchangeable, and then stay with it. Don't go in and out during the day. So that is the view since 17,600 and it has been consistent. Now today, Prashant, we are reaching 18,100. Now there is some kind of a resistance number there. Now bull markets don't really bother about resistance, but for short-term traders, if you have been long following this show for many days now, or on any of the days you went long and you are long today morning, 18,100 could be a good place to take off some positions and hope that you will be able to re-enter in the next few days, either a little lower or at least at the same levels. But taking profits would be a good idea today, around 18,100. So that's the view. The view is not to buy today. The view is to take profits on your existing positions.
Okay, so take profits on your existing positions, perhaps not the most prudent thing to buy afresh. Mitesh Thakkar is also with us. Mitesh, would you concur with that view? Is it too late to buy now afresh? And at what point do you think a fresh long position is justified?
Yeah, good morning. So I think today, Sonia, the key test would be from that, weekly trend line. We've often discussed that. If you look at last 1 year of data from October of 2021, I think we've had 4 or 5 attempts around this 18,100 to about 18,300-400 mark, when if we join all the highs, the trend line is at about 18,070, 80 right now. So I think today we'll start right there. In case we start getting below that, and I think if we start getting below yesterday's high of 18,020, then I think I'll take profits. Otherwise, I'll try and see if the breakout kind of succeeds and if we see immediate follow through to about 18,250 odd level. So positive view, but yes, slightly cautious given the fact that we are at the important level of a trend line. But if that is crossed, then of course we are looking at much higher levels in the coming few weeks.
Okay, all right. Hi, morning, Mitesh. Would you like to give us your stock picks as well?
Najil, I have all 4 buy calls, which is very clearly trading on the long side, and that's what we've been maintaining for the last few days. The first one is a buy on Aditya Birla Fashion, made a fresh swing high. That's a buy with a stop at 347. Look for a target of around 367 to about 370. Deepak Nitrate, that's a buy with a stop at 2270 for targets of 2420. Indian Hotels is a buy. Keep a stop at about 326. Look for targets of 350. And Amar Raja Batteries is a buy with a stop at 506 for targets of 532.
Oh. All right. Sudarshan, what about you? What are your trading ideas?
Well, again, they're also on the buy side. I just keep a short trade simply to keep my enthusiasm a little tempered, that's all. JK Cement is a buying opportunity. Now, this is not about JK Cement itself. Even ACC has a similar pattern. Shree Cement has a similar pattern. So it does appear that after a long protracted correction, cement is putting its act together and maybe there is some momentum on the upside. So JK Cement is a buy with a stop under 2600. Tata Communications is a buy. It's making a very attractive bullish pattern, and yesterday it broke out above that pattern. I think there's more upside here. So buy with a stop under 1240. Tata Steel, surprisingly, is my only intraday short. The stock has been a disappointment on the charts. So go short here, only intraday, stop above 102.15. And finally, HAL, which has been a very sort of some kind of a favorite for me for the last many months, is a buying opportunity again. After a reasonable congestion, a reasonable, say, consolidation, it's now willing to move up once more. Buy with a stop under 2450. Quickly, Sonia, my point was that short-term traders could take profits here, hoping to re-enter again. I don't think this is the end of the bull market. We are probably at the beginning.
Okay, we are at the beginning of a bull market. Got that. Of course, a risk reward is, something that you need to look at, right? I mean, you just can't keep going long because this market is trending higher. So that point is taken. We have Manoj Muralidharan as well, who joins in, Vice President Derivatives at Religare Broking. Manoj, good morning. Very quickly, if you can run us through your strategies for today, stock-wise.
Good morning, Sonia. Sonia, I guess the difference that we have in this November series is, every time we see the FIs are at least short by a good 60-70%, but this time it's the other way around. The FI positioning, at least in the index side, is more on the long side. They are closer to 60% in the long side. And needless to say, last couple of days we are seeing buying in the cash market as well. So we believe this rally has more legs on the upside, somewhere close to 18,300 or at least at the short term. The better strategy here is wait for a dip, buy the Nifty closer to 18,050 to 18,080. The stop loss should be 18,000 and the target should be 18,300. And the irony here is the bank Nifty has not really participated in this rally, and yesterday we have seen some short covering. So today, possible it can be a day for the banking stocks, especially if you see SDFC Bank, we have seen short covering. So the bank Nifty has a potential of almost 41,850. So that is a good index to buy between both of these Nifty and bank Nifty. The stop loss should be somewhere close to 41,000 in that.
Okay, and what about your stocks, Manoj?
Stocks, we believe automobile and oil and gas, these are the two sectors that can outperform this series. So we like Tata Motors, which can be bought here at 412 to 14. The stop loss should be 407, and we're expecting 428 as a target in that. And ONGC, I guess, after 7 months is showing good traction, not only in the rollover side. So we believe 144 to 146 is a target that we have. The stop loss on ONGC should be somewhere close to 128. We can buy it closer to 133 on the current market price.
All right, Manoj, thanks very much for that. Appreciate it here on CNBC-TV18. We'll take a quick break here. We are back with a pre-open. We'll also be speaking with the management of Castrol India to talk about their second quarter earnings. Stay tuned.